Hello everybody, Jackson here from the Wall Squad. Today we'll be talking about what to do in a market crash, correction, whatever you want to call it. However, whatever you call it is not what we are in. We are only down about 3.7% from all-time highs, 3.6 here, 3.7 in the last 3 days, which is nothing, right? That's just a normal market movement. However, a lot of growth stocks are not following that performance. They're doing, down double digits in the last couple of weeks in terms of percentages, and it's correction for growth stocks. So growth stocks are simply those that reinvest everything to keep the operation going, right? So Coca-Cola, for example, they pay a dividend. Whatever dividend they pay is taken out of the income, not being reinvested, and instead being, given to the shareholders. Whereas growth stocks, they reinvest everything. So it's more of a high risk, higher reward scenario. So let's look at some growth stocks today. I'm going to go on finviz.com and we're going to look for the growth stocks just because if you didn't know yet, growth stocks or risky stocks in general are better in a market correction just because they whatever the market does, they multiply that. So market falls 5%, you're seeing growth stocks fall 8 to 9 to 10%, as same thing as if it's going up. However, when the market's falling 3% and growth stocks are falling 20-30%, then you should not be looking at value stocks, right? You should not be looking at like Johnson and Johnson or United Healthcare or Home Depot for the 5% discounts. You want to be looking for the 30, 40, 50% discounts. So let's look at those today. I'm going to go on the country, click USA just to narrow it down a little bit so we could find companies that we know. Beta, which is basically if it's a beta of 1, that just means it moves along with the SP 500, right? If SP 500 goes up 2%, the stock with a beta of 1 goes up 2%. If it's over 1, then it's going to multiply that, just like a growth stock. So SP falls 2%, a beta of 1.5 falls 3%, right? Beta of 2 falls 4%. And that's just it. It's an average number. So let's just do over 2 to find those fast moving stocks. And we're going to do performance of week down and a month down. Okay, now we have 334 results. I'm going to rank it by market cap, and we see first off is Tesla, which we can see is not much of a discount compared to a couple months ago. Still relatively high, although just a month and a half ago is down a lot. Square at its lowest point on this chart, so you may have to look into Square. Freepoint McMoran, not much of a discount. EOG, not much discount. Trade Desk, not much. Schlumberger, not much. Carvana, definitely something to look into. Internet retail, Wayfair on a discount. Dish on a discount for sure. And you could just scroll through down here just to see those discounts, if anything, right? RH, we could look into that. Cleveland Cliffs, we could look into that. When Resorts, you'd think the resorts would be hit the hardest, but they're not. Penn National Gaming, we could definitely look into that. Macy's, Kohl's, Colfax, PVH. So you can see a lot of these stocks, even if they're not even growth stocks, they just move more than the market, are down considerably. But let's just look into Square, Carvana, maybe Wayfair, and Dish. So let's look into Square. We've talked about Square a couple times just because Chris has entered into a big position. He's a big believer in Square. However, market isn't treating this position too nicely just because on Monday. Today down 5.24%. Now we do see on this chart that I drew, actually the trend lines, that this price is almost at this 151 mark, and you can see it's a solid support and resistance trend line, where you can see right here acted as resistance and then eventually acted as support. Same thing here, acted as resistance and acted as support twice. So that's a 151, 134 mark, and Square hasn't even touched those yet. And considering, right, we're looking for discounts from the all-time high of Square, we are buying at a 45% discount compared to 97 days ago, right, or 139 days ago, because we're looking at day, at candle day charts, and these stocks aren't open on the weekends, obviously. So 139 days ago, 97 trading days ago, we're looking at a 45% discount. Square is definitely a contender to look into. Add it to your watch list if you haven't already. If you don't own any already, maybe it's time to start a starting position. It is oversold on the RSI. No confirmation yet on the MACD, but this is just the yearly time frame, right? 5-year, also nothing, but it is under 30 on the RSI. Last time it was under 30, it shot up from 33 to 250, right? So add Square to your watch list if it's not there already. Oh, I'm sorry, Block. They changed their name. Ticker SQ, company Block. Now let's see what else. We're going to look into Carvana. Another stock we've already talked about. Just keeps falling, right? You could see yesterday was a wild day from 200 to 220, and now we are back down today, although not the entire bit, right? Only down 8%. So what we are looking at is another growth stock just getting destroyed recently. Let's check what discount we're buying at here. 337 now. 245% discount, similar to Square, however, just completely different sectors. Carvana sells cars online, where Square does a whole bunch of financial payment stuff. Trend lines also, you could just see here, resistance, 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 then support, support, and now we're trying to break it as a resistance, right? Same thing here, although just basically opposite. We're acting as support, support, and nothing yet, and then support, resistance. So another stock to add to your watch list. That's very, it's risky, but risk is good in these volatile scenarios, where Carvana went from 22 to 378 in a year and a half, and right now we're buying at 45% discount. So something to look into for sure. Next, we're going to look at Wayfair, stock we haven't talked much about, but is another one of those stocks that just shot up during COVID. Where you can see here, went from $21 to $348, $350 in a matter of half a year, right? Less than half a year. So it's one of those stocks that just does not match the market, right? The beta is just abnormally high. And that's what you want in a high risk scenario, just because even if the market does go up, these stocks are going to go up way more. It's not like it has no tie, right? If the market's down 10%, everything will be down, right? Same thing with the market up 10%. But on like the day-to-day basis, it is somewhat different in terms of the percentages of growth and decline. So we're looking at, let's check the discount here. From 370 down to 197, we're getting at a similar discount to the others, however, just completely different industries and sectors. But let's actually draw some lines here. Of course, these are the easy ones. This acts as resistance, and then resistance as well, and now we may soon see it act as support. But on the RSI here, you can see that it is slowly dying, which means we could see confirmation soon to the upside. Wayfair is another one definitely to add. May not be like a long-term investment, but you don't have to trade high quality stocks, right? You could trade bad stocks and still make money. Lastly, let's look at Dish. See what happened during COVID and what's happening now. So we see during COVID it fell 50-60%, and since then has recovered fully, and then a little bit more, and now we're seeing another decline, but not 50-60%, more like 28, compared to the recent 1-year high. We see a 33% decline, so less than the others, but we are seeing it has somewhat of a bounce that we're seeing play out here. Maybe focus on the other three. This one's a lot less random than the others, where it's more like it's at lows right now in terms of Dish is not just there. Maybe stick to the financial markets or internet retail, not necessarily cable, right? That's just what you want to do. But anyways, this is what you should be doing in a falling market. Look for the risky stocks. As an example, I'll pull up Penn National Gaming, one of those that is just insane where you can't even believe it. During COVID, you can see it fell 367 and went all the way up to 150, 141, right? In a year, up 3,768%, and it's not even crypto coin, right? It's not a cryptocurrency. It's a stock of a company. But before that, right, you could see right over here that it did fall a crazy amount, right? If we could even see it down here. So 90% it fell. 90%, and the market did not fall 90%, right? The market fell, maybe 20-30%. But it fell 3 times the market, and now we're seeing another decline. This has to do with earnings, but in terms of buying from all-time highs, we're looking at 67% discount, so 2/3 shaved off the price. If the market continues to fall, we could definitely see a bigger discount. Grab some shares for the cheap, some shares for the cheap. And another one, last one to look at, Overstock. Oops. Same thing, where it's just like, what the heck happened? Where you could see, if we zoom out quite a bit, right, from when COVID started to when it bottomed out, 73% gone, and now we're looking at a $60 price point. At that time it was $2, right? So that's a 30x, but just in the next half year it's up 5,700%. Penn National Gaming up 3,700, Overstock up 5,700. It's no coincidence that they're both highly volatile, risky stocks. That's why you should be looking at these risky stocks. Maybe Square, Carvana are too big. Maybe go down to the less than $10 billion market cap stocks. That's where you find the most return, but it's also the most risky. So keep that in mind. I hope you use this to your advantage. If you enjoyed this video, if you learned something, please press the like button and subscribe for videos every Monday, Wednesday, Friday. Thank you.